Okay, we're looking at one symbol today, a symbol that impacts everybody, the entire world. Even if you're not in stocks or bonds or cash or whatever it is, this symbol impacts everyone, and what is happening with it today and what has happened with it in the past absolutely impacts your life. Stick around. Okay, everybody, this is RC Peck with Fearless Wealth, and we're going to talk about one symbol today. I'm going to pop over to it in a moment. And really, this symbol matters even if you're not in it, even if you're never going to use it, because it tells us what is going on. So the symbol I want to talk about today is the NASDAQ 100. QQQ is the symbol people know it as. And let's start with this price chart. Now, this price chart is from 2007 to 2009. In that time period, the NASDAQ 100, which you all know it as QQQ, fell 55%. Now, for reference, the S&P fell 58%. So if you're taught that the NASDAQ 100 or the Qs always falls more, is always more volatile, that is absolutely not the case. And this is a great example here. This is the global financial crisis that you're looking at. So what I just wanted to point out, during this 55% fall, it wasn't falling every day, every week, every month. There were periods where it wasn't falling. In fact, it was going up. Right? Here's one period where it went up 23%. I just looked at that period right here. You have this period right here, a much smaller increase, but still went up 9%. You come down here, much more volatile because that's a 17% move in less than a month. You have another one where you have a 23%. I just looked at that, and then I just looked at this. What I just want you to notice is markets don't move cleanly down or cleanly up. And this is the global financial crisis. Now, we should not expect the market to do exactly the same thing the same way. I'm simply pointing out to you, let's call it three things. One, there are what are called bear market rallies in every large fall. Now, I don't know if we're going to go down 40, 50, 60%, but if you look at the screen here, you can see that the fall from, let's call it the very end of October of 2007 to August. So if you look at this fall, between the two blue lines, right? So it's just easy math, November 1st to September 1st. That's about 10 months. It only fell net of everything 13%. That's nothing. And then some things really started breaking and it started falling. So for the first 10 months of that fall, it didn't look like much. And then things really started to unravel. So one part is there are these bear market rallies. You really have to understand through price, not through headlines, when the fall is done, not just when it's in a correction, in a continuation fall. The other thing I want to show you, and this is kind of a weird price chart. This is just two moving averages, a faster one, the blue one, that's a 70 period, and the slower one, 161 period. I simply want to show you, look, when the blue is below the red, that's a period of instability. It's a period of instability. And as I go through and show you, I'm just going back in time, like this is 2019. You can see that there's very few times where the blue spends a lot of time below the red. And it almost doesn't matter what you're looking at. And here is 1, 2, 3, 4, 5, 6 years, maybe 6.5 years. And you can see most of the time, the blue moving average is above the red moving average. Where we are today is the blue moving average is spending a lot of time below the red one. What that means is the direction of the market is still down. And I wanted to show you just how it's not a common thing to have what's called the faster moving average below the slower moving average. Now, what I'm showing you right here is that October 07 to the March 09. The blue line was not below the red line the whole time. I'm simply deleting a lot of information to show you that this is not a clean thing where the market just like, oh, we're going to fall 2% a week until we're down 55%. The market goes up, it goes sideways, it looks like it's over, it looks like it's absolutely clean. I mean, if you go back to 2008, there was a period where you could just say the market was sideways, literally for, I'm going to call that 7 months. The market didn't fall. It was at the same price it was the previous 7 months. And then things really started to break. So in these periods of instability, which we are in right now, and no one really calls it that, I'm calling it a period of instability. I'll go all the way back to 2000 to show you a period where the blue line really stayed below the red line. We're in a period of instability. That's a period where you want to be doing something called protecting what you have, right? This is the time to protect your life savings. This is not a time to look for quick wins, squeeze a couple percent out, but it's really a time of protection. Okay, so super short video today. I wanted to keep it really simple in that the direction of the market is what matters most. The direction of the market is still down. Maybe it bottomed 2 weeks ago. We don't know. No one knows, but it's been down for 7 months and it is still weakening. That is the most important part to know about the market. And by the way, it's just not the NASDAQ 100. It's all equity indexes around the world for a couple, with a few small exceptions, Canada, Australia, are holding it better, but still down for the year. So the takeaway is this is a period of instability. This is a period to protect your money. This is not a period to be looking for something to make some money outside of equity or jump into bond or get something in real estate or get an NFT. Or this is a period of instability for all the markets. I appreciate you all being in my world. If there's a topic you want me to cover or something you don't think I cover enough, please leave it in the comments and let me know where I got it right and where I got it wrong. And I will also comment on that. Thank you for being in my world. I appreciate it. One real interesting note, back in 2008, the NASDAQ 100 fell 55%. The method that we use to manage people's money, that method fell 19% using the same symbols. So that is a good reference back in the global financial crisis when the NASDAQ fell 55%. Even 60-40 funds were falling somewhere between 38 and 48%. The Fearless Wealth method only went down 19%. If you're curious how that might be in your portfolio, how it might work, just go ahead and reach out to us. You can get the information in the description. Thanks everyone for being in my world. Take care. I'll see you next week.